All right. So we're going to look. What pairs do you have on your own watch list? What pairs do you have on your watch list? So that we can look.
EUR USD and GBP USD.
All right. USD and GPUSD. Personally, I have gold. So we're going to look at three of them. So USD, this is the daily time frame. I think we didn't, or we haven't really exhausted our analysis for the previous week. It's just a little bit of work that will be there. So we have the highest high, which was here, and then we had a sweep of the high. Meaning we should now have our highest high here, and then the lowest low is right there. We're still respecting this impulse, and then this should be the corrective phase. So we have this 1 and 2. So this is the pattern we have. Because of the fact that we swept this high, we should be looking for the market to interact with this previous swing point. So we are looking for USD to still drop. Last week, we had it dropping, I think, from this level, or I don't know, to drop down, and then yeah, it did. No, not that level. 7 days ago was around there. So we had it to drop, and then yeah, it dropped. So we're still looking for USD to find its way down here because it swept the previous swing point. So we should be looking at it to interact with the next swing point that it is facing. So that is on the 1 hour, sorry, the daily time frame. So we should look at the 4 hour to see further into the patterns to see what is there. Please, if you come, make sure you mute yourself so that you don't disturb us. If you are here, make sure you mute yourself so that you don't disturb us in case you have a noise in your background. If you don't have noise in your background, you are good. So this is the 4 hour, and then our daily bias is that it should be selling. So on the 4 hour, we should be looking at some things that will make us, see the reasons why our daily should be valid. Or we should just come on the chart and look at the current phase, because the current phase will actually tell you what will happen next, and also to, teach you to support the previous thing that have happened. So if I look at the current 2 swing points here now, we have this market took this high. This is a sweep before the drop. So whenever we have a sweep, whenever we have the market sweeping, we know that it should come to interact with the other swing. Michael, welcome. Whenever we have the market sweeping, it should come to interact with the previous significant high that created the swing point that was swept. Okay. So what we are anticipating is that the market should come in, meaning our reason for sell on the daily is still valid. Please, sorry about the noise in my background. Today is Sunday, and my neighbors have a lot of visitors. So we're just to connect this 1, 2 again, because that is the trend is given to us. Then this place we now count it as a swing point, 1, 2. So we are anticipating the market left the second touch, so anticipating the market to come and give us a third touch, give us a touch on our trend line before the sweep of this high. So we are anticipating the market to come to interact with this significant low that created this high. That's what I was saying. So we're anticipating the market to come down to interact with this low. So since the market already swept, anticipate the market to come here. So since the market already swept this high, what we should be looking when we go lower is for us to look at this place to give us a support, a reason to short, give us reasons to short below. So we should go to the 1 hour, and then we will see if the patterns make sense. Cool. But if it doesn't, we wait for it to make sense before we interact with it. I think we can actually get, you see the market impulse to the downside, So this is like a tight flag. After this, it can drop. Or it can decide to do our thing. We broke this structure, so we can decide to do our thing, give us a pullback, then give us the relevant entry. But I think if we go lower, we also had our entry criteria met at this level because of this. You see, this swing was taken, so it's really an entry. So the next possible thing that's supposed to happen for this is for this guy to be a proper flag. Then we should be anticipating the sell to the downside. Okay. So for the directional bias of Euro USD, we are looking to sell Euro USD unless it does something otherwise. If it does something otherwise, then we can be looking to buy it. Like if it comes and break above this guy, then we can be looking to buy it. But for now, based on what we have on the chart, based on what price action I've said, should be looking to sell Euro USD back to this level. And hopefully, if it breaks below, then we can be looking to target the daily low, which we have here as well. So this is for Euro USD. So when you are trading Euro USD next week, try to always put your mind on the little sell bias, because we swept this high, and We swept this high, and on the daily, we also swept a significant high. I'm sure that is clear enough. So let's look at GBP USD. And this is the daily for GBP USD. So on the daily, we want to focus on the current side, all right? So the current impulse is this. We're having this run to the downside, and we're having this little bit of relaxation on the market. So we have this as the highest high on GBP USD, and then we have this place as the lowest low. Just like we have last time, we had this connecting this 1-2 on GBP USD, and then GBP USD is looking to long to this level because we just swept this previous significant low. It was a sweep on the daily, so we are looking to long to this level. I think there's a little bit of difference from USD this time around. So we're looking to long GBP USD to this level by next week. So we go to the 4-hour to see further if we can get competitive move. I think interaction with this ring already, you can see that we already broke significantly. You can see that the uptrend is actually engaging because we have this one now, 1 and 2 as an uptrending trend line, and then we have the market currently at the next swing. So there's no way we can connect the trend line right now because that's where the market is. It is not ideal. We can't connect it right now because that's where the market is. So we have to wait for the market to come and play out the week and down, connect the trend line. But for those of you that understand the entry criteria we use, you can know that when the market starts falling, you know when to look for your buy entries for the further cash to the upside. So GPUs we are looking to buy. Let's look at the 1 hour to see. Because what happened to this swing, it is not a sweep, it is a significant break. The market has broken above this particular swing point and it is clearly above it now. So we are looking to buy GPUSD for next week. Though you know that we need to sell off so that we can come to create another higher low before we can get to look for the buys. So for the sell-off, this too is making sense now because the market already left this swing 1-2. So we can be looking for a reason to enter. And then now we have our rate here. So from the daily, from the 1 hour, we can be looking for like something like this, over up a little, and then drop to create us a pattern or give us a second touch and then a third touch again. Then we can finally drop. This is going to be the running channel for the proper drop before we now look for the buy on the higher time frame. Okay. Someone had, I don't know if this guy is here. No, it's not here. Gideon is not here. So that is what GPUSD. Okay, this is the directional bias for GPUSD. This is what I see on GPUSD. I'm sure it is self-explanatory to all of us. So this is the current impulse, and then this is what it's trying to do right now. Now the market is here. It can just come and give us another touch here, interacting with this little high, so that it can come give us a second touch on this particular little bullish move we are having. Then we can find it to sell off, to come and mitigate or give us a touch on this trend line that we got from the 4-hour before we continue the bullish run we saw from the daily. So let's look at gold, and that's going to be the final thing. And if you have a question, then we get to interact and ask ourselves questions. So this is gold. Gold was kind of scary last week. Look at candles, bro. It's not easy. Jackson, hope you are good. Your baby was too scary last week for me to even say. So we have this impulse, and then we had this consecutive run. So we had this as the lowest low right now, and then the highest high is this level as the highest high. So connecting the trend line, we have this 1 and 2, and then we have this place like this. We have this like this 1, 2, and whatever. So for gold, we're anticipating it to come down. I also looked at the lower time frame. This is the 1 hour. So let's look at the lower time frame, the 5 minute. This is how I look at the gold. It's on the 1 hour and the 5 minute. I don't go to daily because it is really, really volatile. So I just look at the 2 time frames I trade. So if we look at the 5 minute, which is the lower time frame I look at, you can also see that it is giving us reasons for the sell, which means that the 1 hour bias we have is actually making sense. So if we have this kind of movement, we should be anticipating what? We already have an impulse like this, meaning this phase is the corrective phase. And from here, the market rejected here. So we should be looking for it to come to this trend line and then finally give us a second phase, the third phase, which is the impulse. And the third phase is actually pointing to the place we have the trend line coming to give us a third touch of our ascending trend line or ascending pattern we have here. So this is also what we have for gold this week. So if you have